Last month, credit ratings agency Standard & Poor's downgraded global oil giant ExxonMobil from AAA to AA+. The company had held on to its AAA rating for over 60 years. ExxonMobil is just one of many casualties caught in the volatile oil market. Earlier this week, two publicly traded U.S. oil companies, Ultra Petroleum and Mid-States Petroleum, filed for bankruptcy.
I think you have some marginal producers that will continue to show distress. This last rally in oil has given the institutions that lend to them, the banks and the bond markets, some degree of hope. But you have to understand that when creditors force you into bankruptcy, it happens when they lose hope. And another decline in the price of oil, I think, is going to clear the market enormously on some of the more distressed situations out there.
According to a recent report from consulting firm Deloitte, about a third of the world's publicly traded oil companies are at a high risk of going bankrupt this year. But it's not just the oil and gas firms that are affected. Many oil-producing countries, including those in the Gulf states, are also being hit hard.
So we're going to see a further probably $100 billion or so in terms of lower revenues from oil exports. And this is now beginning to affect not just the financing, but also the economies in terms of their economic activity.
RBC Capital Market strategist Helema Croft suggests that the psychology of the market has changed, leading many to believe that the oil market will stabilize at around $50 per barrel.
I'm not going to say that it's never going to spike back over 50. I just don't believe it's going to be sustained at that level. And I think we'll see additional tumbles back into the low 30 range before long.
As oil prices continue to slide with really no end in sight, many oil-producing economies are now being forced to diversify their revenue streams. As for the oil-producing companies, well, they're bracing for a grim 2016. Tracy Tandon, CCTV, New York.